All right, guys. Welcome to uh 4 times webinar. Renewed. I'll just call it renewed. Now, taking 4 times your account. A mechanical risk framework, a structured approach to account growth, full signal drawdown control, recovery after loss, and profit protection when the market is good. Now, 10%. Maximum full risk entry martingale level 1, martingale level 2, martingale level 3. Only when account size can support it. You probably have heard me say only when account size support it. And there's also the part where I'll be talking about discipline greater than emotions. All these things are things we have an idea of. So I wouldn't waste so much time in these preliminary areas at all. I will just go straight into it immediately. So now let's get to it. Let's get straight into it. So today, what the webinar will clarify, this is a risk framework. It is not guaranteed profits. It's a risk framework. Now, there's also no 100% win rate that exists. You already know that. Full signal losses, of course, will definitely happen. Then we also have the system protects the capital call before it chases growth. First, like I used to say, the first thing you need to do as a trader is to always learn how to protect your capital. It is very, very important. That's the first step. And then the minimum trade you can risk, the minimum amount you can risk per dollar for small account size, especially those who have small account size, is $1. And the minimum will determine how many martingale levels we can use. So the next thing we have is a signal is complete only when the planned ladder either wins or fully fails. So all these things will be explained on this 4 times webinar. Now, things that I used to say, we do not risk 10%. We allocate 10% across the entire plan signal sequence. Now, whenever we want to trade, I used to say something. Whenever I want to allocate a particular, let's say I want to risk, I risk a particular 10%. And that 10% is not per trade. It is by what? Per signal. So a signal contains entry 1, martingale level entry, martingale level 1, martingale level 2, and martingale level 3. So you'll be seeing me use some things like this later on, so don't get it confused, especially for our new guys. But yeah, and let's go to the next page. I won't be wasting so much time. So, like I said, I won't waste so much time on this in these areas. Now, why most traders fail to scale? That is the first thing I want to talk about. So we all know that it is not signals that makes us fail. It is the lack of structure that makes us fail. Now, what do I mean by structure? It's an organized way that we have chosen to trade. It's an organized, a mechanical way that we have chosen to trade. So how does a car work? Right? Let's give it an example. Now, I don't know so much about mechanics, but the few that I know, I will probably use it. So I will probably explain it. Now, I'll probably explain it the best way I can, so you will be able to follow me very, very well. Then, a car contains electrical, mechanical, and chemical. Those are the 3 things that makes a car work. Now, the electrical comes from the batteries, the alternator. Alternator is even after, but it is part of the electrical parts or electrical areas of the vehicle. But battery is the first thing. Kickstarter is the kickstart is the second thing. Then you start the engine. And the moment you start the engine with the battery, it kicks into the engine, runs straight into the engine. Before engine also runs, you have the piston, the crankshaft, uh, you have the so many things. This thing that holds the piston. Now all these things work hand in hand. So the moment I start the engine, those things starts to move. Electrical kicks the mechanical, mechanical moves. Now they start to move. Then they hit the spark plugs. Then from the coil, okay, it enters into the coil. Then from the coil to the spark plugs to the engine, then pow, engine starts. Now the mechanical part is the fuel that you have. The fuel inside the spark plug, between the spark plugs, the spacing between the spark plugs and the piston. That is where fuel is pumped into. And the other side is where air comes into it. So now, when those things spark together, when there's a spark from the spark plug, it ignites whatever is inside. It ignites the air and engine starts. Then it keeps doing that same process back to back. Kicks out the air, puts in fuel, brings in fuel, spark it again, kicks out the air. Then it does that process all over again. And as long as it keeps doing that, engine is still running. There's an intake, there's an escape. So as long as it keeps doing that, it's a simple combustion engine. I'm not doing anything complicated more than that. But that is how it basically works. Something like that, something similar to that. I know there's some mechanics that I would have said there are some things I missed out, there's some things that I got wrong. But my point is that every single thing had a process. Now, for that engine to run, it has a process. Now, for it to now move from point one to point B, that is where it now needs the gears, the gearbox. Now, the moment you move the gear from what it was before, then it unhooks. What do we call that thing again? I've forgotten the name. But it unhooks that. Then the vehicle moves forward or backwards, whichever direction you want to go. So every single thing has what they do. Now, the moment one of them fails, vehicle will not work. You will not get either you don't get maximum performance, or it doesn't even start at all, or it has another issue entirely. That is the same way you should look at trading. Every single thing that you are going to be doing requires you to do it consistently, back to back. For you to know that a vehicle is good, you need to use it multiple times, right? You need to keep doing it, keep doing it, keep doing it. And you know that, oh, this car did not stress me, this vehicle did not stress me. You keep using it. One time. Anyway, let me give that part. Let me give that part. So that is basically how it works. So now, why do most traders now fail to scale? That's I just explained what structure is there. The structure has to do with the law of making. It has to do with you being mechanical in trading. You do this, you do this, you do this, you do this. That is all. This is a process, and you can't do anything without that process. You will get used to it to the extent that when you see other people doing something different, when you see other people doing something different, you would feel, ew, what is this? This is not the way I do my own. That is what structure does to you. So now, why do most traders fail to scale? One of it is over risking. I want to go very fast. One of it is over risking, and that over risking it's a common trait. It's not something that is easy to stop. It's not something that one can just look at and say, "Oh, stop it." People tend to just do it normally, like, and I understand to some extent. I feel like a lot of times it is the motivation. The motivation behind you coming into trading would require you to want to take risks that are beyond your capacity. Now, for whatever reason you funded $10, there's nothing, you don't have any obligation to make 100% immediately. Now you look at the money as the money is small, but you want to make 100% of that small money. Is that not greed? Like if you feel like, okay, you wanted small money, but you now want to make 100% of the money very, very fast. Are you not a thief somehow? Now, the person that funded $100 is not thinking of doing $200 immediately. But the person that is not doing $10 wants to do $20 immediately. Think about it. Is that not greed? But then these are the things that motivate us to trade. These are the things that motivate us. That is why we over risk. That is why we do all those things. And when you over risk, what you are putting yourself in a situation where you are riding on luck. It is not the system you are using at this point in time. It is the luck you're not riding. So if you come into a period where the market is very sweet, you realize that wow, I over risk, even though you don't know if you did or you didn't, or you just wanted to trade, you would realize that it favored you, and you be like, this thing is good or this system is good, and you would have a particular excitement, and you feel like you've done something for yourself. Meanwhile, if you came into a period where maybe you came into a choppy market, for example, and started trading that period, then you realize that all my money is gone. This thing is not good. That is not the way that is not the way trading works. Trading is gauged over time. And the moment you over risk, forget it. You make the money faster, you will lose it just as fast. Trading has that way of doing that. Trading has a way of doing that. You make the money very fast, you lose it just as fast. So over risking, one major reason why traders would always fail to scale. Second is emotional trading. It is common. I'll give you an example of one particular time. So when I just started this structure thing, do you believe that I have the note here? When I started this structure thing, when I started trading structure, there was a particular time I tried the wave out, the wave out. So I created a very small, um, simple system that year. So I created one. I put together some indicators. Then I used one of them as a form of entry. I see this, I see this, I see this. I enter. So after trading for a while, I built that account. So I turned from 30, if I'm not mistaken, from 30. I can't even remember. Is it 30? I need to go and check that account again. But I built it. I did over 200% on that account. 200%. But I felt the money was not so much now. So it was just something I was playing around. Now, it didn't take me like it didn't take me it took me about 1 week to do it. I'm talking about emotional trading here. Talking about one week to do it. Then one day, I think out of fatigue or out of tiredness, I made a mistake. I was supposed to use 0.7. I used 1.4. So I overdid it. Now, when I did 1.4 that day, I I lost that particular entry. So the thing was so painful. Just said, wait, since I still have one more step to go, when I was supposed to just use another 1.4 and let it go, I decided to say, okay, let me just go with 2.8, which I had never used before. So I tried the 2.8. That one also went. Now, that alone had wiped out more than 1 day of progress. Before you know it, I went 5.6. And everything is written here because I journaled it down. I can actually look at it. That is one of the reasons why I gave the example. I have it in front of me here as I recorded it down. Now, all those things that I did sent the account back down to where I started from, to where I began from, something of over 1 week or close to 1 week of work because of what? Emotional trade. So I'm not saying it never happens to everybody. It happens to everybody at some point. It will happen to you. But one thing is, as long as you have a mechanical way of trading, don't break it, no matter what. But emotional trading, it will never happen. It did not help me scale because I did over 100% on that account. I did 200 and 230, 240 something percent by calculation by me just thinking randomly. If it's double, I doubled it because I was trading on 1 minute, 1 minute charts. So I broke it down in 1 minute. That is how it works. What emotional trading does for you, it is just undo all the work you've been doing for as long as you can. Remember, it will undo everything in one day. I know someone of recent who did pure emotional trading and lost about 2,000, $2,600 in the space of one day. Just a couple of trades, so just a couple. Something that I managed to grow, then it did it just a couple of days, lost, gone. So I've seen it happen. Now, how do you remove all these things, which we'll talk about later? Like I said, structure is what you will use to uh, eradicate all these things. Now, the next thing is what revenge trading. They follow each other. Emotional trading is backed up by revenge trading, revenge entries. Emotional trading, you know what to follow it? Revenge entries. There's nothing they're not so far off each other. They hold them, so they are interlocking hands. They hold themselves like they follow themselves all around because emotional trading itself, revenge trading itself is emotional. Now the next thing is the fourth one is when you don't know when you don't know when to stop. No stop rule. When you don't know when to stop, you need to know when to stop. So if you don't know when to stop, these are one of the reasons why what you cannot scale when it comes to trading. So why do most traders fail to scale? Over risking, emotional trading, revenge entries, and no stop rule. So you need to know, okay, I am done. This is me. Let me just stop. So let's move to the next. Now, this part is for beginners, most especially, and I'll be explaining one after the other. Hopefully, we'll be able to finish this webinar tonight because the pages are quite long, and I don't want to miss anything. I want to give it proper explanations. Now, the first thing here, terms and meanings, I want you to be able to follow it. I want to be able to understand. Now, exactly for those who are on the consistency, anything that makes you post on the channel, you're on the consistency challenge, you're on the consistency competition. Now, first things first, opening balance. There's a reason why I'm doing opening balance. Now, opening balance is not just a random thing that I just thought of. It's opening balance is the size of your account at the beginning of the day. This is me teaching you how to create a structure. Now, opening balance is what? Opening balance is what? Is your what? Account size at the beginning of the session of the day of whatever you do. And the opening balance is what you use to calculate your 10%. So now you wake up today, let's say you have $500. That is your opening balance. that is how much you have. And then you fund $10 or you fund 20 or you fund 50, that is your opening balance. That is how much you have to begin a trading session. So opening balance is how much you have to begin what? A trading session. So now the 10% of your opening balance is what you usually use to trade every signal, or is usually what's usually used to trade every signal. So let's keep going. Now, the next thing we have is a full signal. I already talked about it. Next meaning we have, for those who are new here, I wish new guys are so much here, but I can't find them here. A lot of us have been here. I don't see any face. Probably the only new, most recent face is Mr. Polari. Now, full signal talks about all the entries allowed. Entry 1, martingale level 1, 2, and 3. That is what we have. So that is a full signal. Now, a full signal too, it also has another definition, which is not here. Now, it depends on the size of your account before we can say, okay, this is a full signal for you. It depends on the size of your account. But then don't let me complicate it. So for a full signal, it involves entry, martingale level 1, martingale level 2, and martingale level 3. As time goes on, a lot of people will get that. Now, the next term or the next word that will be throwing around a lot is drawdown. Drawdown simply talks about the amount lost when all levels that you plan to use has failed. So you see that I didn't say drawdown is specific for everybody, is defined for everybody. No, I said it is what? It is when you have lost the amount that you have planned or you set aside for a signal. And when you lose all those amounts, then that is your drawdown. So, for example, if someone tells you that your daily drawdown is 10%, so that means you cannot lose more than 10% per day. 10% on your account. 10% of what? Of your opening what? Of your opening what? Balance. You cannot lose 10% of your opening balance. That is your drawdown. So remember, opening balance is the amount you have to start a session at the beginning of the day. When you calculate 10% of that, and you now lose 10% of that, that is what your drawdown. Do you understand? So now, daily budget. That is the amount that can be lost for the day. So when I say drawdown, is total amount to have planned to lose. Daily budget is the specific amount that I have planned to lose. Hope I'm not confusing you now. So when you see this is the amount I'm setting aside. Now, drawdown is when what? You have a plan. Okay, this is my threshold. Now, daily budget is the total. This is the total amount I am losing per day. So now the next thing we have is the target. A lot of people don't know that you have to have a target when it comes to trade. You must have a target. Every single time you trade, or you come into trading, or you enter into, or you pick a signal, or you're about to pick a signal, you're about to start this trading session, you need to have a target. You need to have a target. So also have that at the back of your mind. Time you would hear the most: opening balance, you would hear full signal, you would hear drawdown. Whenever I say daily drawdown, people don't get me. Some people don't get me. But for those who have been here for a while, you would have seen the term being thrown around a lot. Daily drawdown, it is the total amount lost. That's one. That a daily budget that you have. If you lose the daily budget, that is your drawdown. If you use your daily drawdown, that is your portfolio. Daily budget, this is what I'm setting aside for the day. Now, if you now lose it, that is your drawdown. So let's go to it now. Trader must be able to fund the whole plan ladder before entering a signal. Note a rule. Trader must be able to fund the whole plan ladder before entering a signal. Now, the plan ladder varies across different account sizes, right? Which I'm going to go into next. Plan ladder varies across different account sizes. So your plan ladder will be different from mine. My plan ladder will be different from yours. But the moment I can afford to entertain all the plan ladder, it's a good one for me. But if I cannot, I will use the plan ladder um that is appropriate from my own account size. Let's go to the next thing. I think we are getting deep into it now. Now, the 10% law, that's what we're talking about now. The 10% law is the maximum complete signal exposure, not an entry stake. So if there's entry, there is a signal. Now, under signal, we have 4 entries. So there's a 10% law that says that all that signal in total must not go beyond 10%. If you're going to trade any signal, you must not expose yourself beyond 10% for one signal. Maximum. So 10% maximum total loss if the full plan signal fails. So daily risk budget equals to 10% times opening balance. So if you want to raise it, so this is just like a formula for how to calculate your 10%. You just know that if you have $10, 10% is 1, basically. If you have 20, 10% is 2. If you have 30, 10% is 3. If you have 40, 10% is 4. If you have 40, 10%, if you have 40, 10% is 4. If you have 50, 10% is 5. You know how to calculate 10%. Very easy. So now, how do we do it? We have, like I said, we have entry is level 0. Martingale level 1 is L1, Martingale level 2 is L2, Martingale level 3 is L3. A win at any of these available levels ends the signal. So you know already that when you take a signal on entry 1, let's say entry level, and you win that signal, you go to the next signal. I'm just trying to brush around the structure before we go into structure itself. Now, you know that when you take a signal, you win on entry 1, you go to the next signal. If you don't win on the first entry, which is the entry level, then you win on Martingale level 1. You won the signal, you go to the next signal. Now, the next signal, if you don't win on entry 1, you don't win on Martingale level 1, you don't win on Martingale level 2, then you win on Martingale level 3. You've also won the signal, so move to the next level. That is how the concept of the martingales work. That is how the concept of the signal works. So make sure that for whatever you're doing, you are allocating 10% of your account to that one signal. That is the 10% law. Now, the next thing we go to is the 1% minimum trade changes everything. Okay, so because you cannot enter below $1, smaller accounts must sacrifice martingale levels. Now, if you have $10, except you are using a Naira account, which I think I've broken down before at some point, so maybe I will still break down later during this live session. If you know that the minimum you can risk is $1 per time. Now, when you're risking $1 per time, smaller accounts tend to suffer from this part. The reason is, if you are risking $1 per time, right? That means that for someone who is trading, are you serious? For no one can hear me clearly. For someone who is trading $10,
your voice is clear, sir.
Okay. For someone who is trading $10, that means that you can only do one entry. That is the first entry, and you will what? Give up. You can see this. Because your budget is also what? $1. And the only thing you can afford is the first entry. There's nothing else you can do. You can't be a martingale level. Just give up. Entry one, you don't win. Just give up. My network is decent. I don't know why I don't know why it is cracking on your side or it is scrambling on your side. Now, the next thing we have is $30. Now, $30, your 10% is what? $3, right? Since 10% is your $3, that means you can do what? Entry one and martingale level one, because one, you will double. That means two. 2 plus 1 makes it 3. We will get there we'll get to the explanation later on. Then you'll be able to see it. Now, the next one that would unlock the next martingale level is when I get to $70. Now, $70 means that $7 is my 10%. Now, when $7 is my 10%, I will be able to afford entry one, martingale level one, and martingale level two. Now, the next thing I have, when I can unlock the next martingale level, is if I have a balance of $150. Right. Now, if I have a balance of $150, I will be able to use martingale level one, martingale level two, and martingale level three. That means if I'm risking $1 as a minimum, I'll do $1, $2, $4, $8. Everything equals what? 15. So $150, 10% is $15. That means I'll be able to use all the full ladder from $150. So I can't use all the martingale levels unless I want to do that. Somebody might be on the live session today who would have heard me say that when Mr. Emmanuel like that said he married a Nigerian, this, that, and so on, said something about what is the minimum amount that I recommend for him to use. I said, just start from $150 to $200 minimum. If you don't have up to that, you can trade lesser amount. But when you have lesser amount, it requires more patience. So this is it. Now, you reduce your debt, you don't reduce discipline. It is if you lose, all you simply need to do is come back down. Don't reduce your discipline. That is what it simply means. What it simply means is if probably you lose your let's say you get a drawdown. What you lose is your debt. But in the meantime, don't lose your discipline. So now let's move to the next slide, which is what? The dollar ladder structure. Now, this is the dollar. There's also the naira coming up. Now, dollar is very, very simple. Dollar is very, very simple. You have the structure we know, like I explained from before. I said something about $150 being the ultimate level for the ladders. You can start using your full martingale levels from $150. A lot of people know this, and I will just still talk about it as I breeze through all this place. So level one, if you start with $1, your cumulative risk is $1, right? Now, when you get to entry martingale level one, that means you double. For those who are asking what martingale level is, you double. Then that means you'll be using $2 on martingale level one. So in total, that makes it $3. Now, the next thing you will do on martingale level two is $4. Now, in total, it gives you 7. Now, when you do martingale level 3, $8. The cumulative risk is now $15. So that means that for you to be able to use all your martingale levels, you need $150. That's what it means, minimum. And that is if you're starting with $1, which I always advise. So you cannot go beyond using $1 from even from $150. So at lower balances, what? At lower balance, the system always it will require you to use fewer levels. I've said it multiple times already. The system will require you to do what? To use fewer levels at what? Lower balance. A lot of people will be like, if I start with $1, how do I make money? You will. I use 700. What is 700 to 600 something thousand? But I grew account fast. So let's keep going. At lower balances, the system uses fewer levels. So now let's move to the next one. Now, the dollar scaling map. So, okay, so I don't want to discourage people with $10, but I just had to put it there because if I didn't put it there, it would not, be so you people will not really get what I'm trying to say. Now, for those of us who are using between $10 to $29, right? What you are simply doing is practice or survival mode. Nobody's saying you cannot grow it. Of course, you'll be able to grow it. So now look at it. Balance of what? $10 to $29. 10% budget is what? $1 to $2.9, right? Now, the only thing you can do with that is the entry alone. You cannot do anything beyond what? Entry alone. So, what does it mean? It means you are just what? Either you're in practice or you are in a survival mode. Those are the two. That's what it means when it comes to $10 and $10 to $29. Now, the next thing you have is the $30 to $69. Right? A lot of us started with $10, then you realize that it is going to be hard to do $10. Then we switch. Now, if you have Naira account now, you probably will not be. You probably start from recovery part, first recovery part. Now, when you have $30 to $69, your 10% budget is what? $3 to $6.9. Now, what you can afford to use is your entry one, is your first entry, and your martingale level one, which by many top says it is the first recovery depth. Now, you are getting closer to the top. You're getting closer to the top, right? Is Mr. Shea even on this slide? Why is he complaining if he's not even on the live stream? Then how is he listening to me if he's not on the live stream? So now the next thing we have is the 70 to 149. Now the 10% budget is what? And is $7 to $14.90. Now, what sequence is allowed on that? It is what? Entry level, martingale level 1, martingale level 2. So to some extent, it is structured recovery. You are getting closer. I call it structured recovery because you are getting closer. Anything that makes you use martingale levels, you are deep into recovery levels already. You are deep into recovery levels. You can afford so many things. Yeah, you can afford most of the signals. It's only a few that gets to martingale level 3, but you can afford so many of the signals. So the last one, which is the ultimate one, is the 150. Now 150's 10% budget is $15 upwards. Now the allowed sequence is Entry 1, martingale level 1, martingale level 2, and martingale level 3. That is full activation. You are anywhere, anytime, any day. You are confident you can take your 10% without stress. And you can use all your martingale levels. Now, never for any reason when you have hit your daily drawdown, that means if you finish your 10% budget in one day, never for any reason enter or fund another sequence unless you have something left in your budget. Never for any reason execute any signal except you have something left in your budget for the day. So now I've changed the whole thing from drawdown to budget. But you have a budget. Budget is the proposed money of 10%. Now, when you now finish that 10%, that is drawdown. Hope that is clear now. So let's go straight to the next thing. Now, this is the Naira scaling. I know you people were waiting for this. Well, this is it. So I did it together. There's a cumulative part where I was in cumulative one. Then I did the recommended depths and so on and so forth. So here in this case, I have entry 1. We know the minimum amount you can use for a Naira account is 450. So that means that your cumulative risk is 450. Now, if you are using martingale level 1, you know that you're going to double on the first amount, which is 900. So that means that your cumulative risk will be $1,350. Now, the next thing you have is the MGM martingale level 2. Martingale level 2 means you have double of your 900. That means you're going to be using 1/8, which means your cumulative risk is 3,150. Now, if you are going to the last martingale level, that is 3,600, cumulative risk is saying you are using, say, you have a total of 6,750. So that means that for you to be able to trade full martingale level with a Naira account, you need about 67,500. That's what you need. 67,500. That's what you need to be able to trade a full martingale level, a full signal from entry 1, entry 2, martingale level 1, martingale level 2, and 3. Entry 1, martingale level 1, martingale level 2, and martingale level 3. So for you to be able to trade everything, you need a minimum of 67,500. That is when you can begin. Now, balance sheet recommended depth. The moment you start with $10 in then it is $10 in Naira is 15K, right? The moment you start with that, automatically you can use one martingale level. That is what entry 1 and martingale level 1. That is what you can use. So now, how does this work? You have from 15 to 39,000. That is what you can use entry 1 and martingale level 1 for. Now, when you get to what's the name? 40,000. I think the calculation a little bit is off a little, but I'm just giving you an idea. The calculation is off a bit. Now, I'm just giving you an idea. Now, from 40,000 to 67,000, that is when you can push what? Martingale level 2 from 40,000. Because when you do 900, remember 450 plus 900, that's 1,350. 1,350 plus 1,000, that's 3,150. So that is already up to martingale, which is what 40,000. The 10% of 40,000 is 4,000. So you still have about 850 Naira there to use. So that'll still be left. So what does that mean? At 67,500, you can use the full ladder for all the martingales, all this full signal. You can plot the full signal. You don't necessarily have to pay anything. you can touch the full signals at that point in time. Hope you guys are still here. Hope you guys are not sleeping. So let's go straight to it. I've gotten to a part where it is not going to get more complicated a little bit. So now the next thing I have is execution flow for one signal. So a mechanical part that prevents emotional decision. Follow this very, very well. Now, when you confirm your signal, you check your timing, check your payout, check your account depth. It is very, very important. Next thing is you enter at entry level. Use what? The approved minimum entry. If your account is small, you know the minimum you can risk is $1. You can't do less than that, approve that. Now, if loss revalidates, martingale level is allowed only if the setup remains valid. So the moment you trade and you lose your first entry, what do? You engage martingale level only if what you lost. But if you won, skip to the next signal. So now, when you win ends the signal. Full loss ends your session. You would always see that whenever I hit full signal loss, I don't trade anymore, even on my live sessions. I just watch. I just leave it. That is done. It's done. That session is done. Because whatever makes me lose my martingale on any session, I know that market is just drop. That's what it means, basically. So you win, it ends that signal. You don't win a full signal, it ends that session. That is the rule. So never enter martingale level 1, 2, and 3 simply because the previous level lost. Or simply because the previous level won. That's what I wanted to write, sorry. Simply because this previous level won. Don't even try it. Don't enter a martingale level after you have won the previous level. So next thing we go for is the next one. Now, daily stop and target rules. So for those of us who are in between, when you have that $20 to $40 kind of thing, where after you take your 10%, and after you traded your entry 1 and entry 2, then you still have small change left, right? You can still trade that small change because it is not up to your 10% yet. So for example, someone that trades, let's say someone that has 40,000 now, right? That has done martingale level, entry 1 martingale level, 1 martingale level 2, that is about 33,150. And the person still has like 850 left. Now, you have not exhausted your 10%, so that means you can still trade with that 850. Maybe if it can take only entry 1 for the next signal, take it. If you can take the entry 1 for that one, take it. Make sure you don't what's the name? You don't dodge that. Take it. Now, stop when your cumulative daily loss is at 10%, reaches what? 10%. That is when you can only stop for the day. Stop when the remaining budget cannot fund another full signal. This is me comparing loss and profit. Loss stop and profit targets. Now, why is that? Because a good system knows when to stop on both days, both good days and both bad days. You need to have, as long as you know, okay, this is a good system, this is a good structure, you need to know when to stop. Both on days that are good and both days that are bad. So the third one on the loss stop is stop immediately after a complete signal is lost. At accounts allowed depth. Okay, so for example, let me explain this part there so you'll be able to get it. So, like I was explaining the other time when I said a full signal is lost. And I see a lot of people do this. That is why. So, but when you hear people say my daily drawdown is it, oh, well, that's how. So when you say my daily drawdown is it, right? You will see. Let's say, for example, you have 40,000, like I said, then you have 4,000, right? So I know that you will still have room for 850, like I was giving as an example. But the moment you have lost entry one, entry two, and entry three, that is entry one, martingale level one, martingale level two, right? You should stop for the day. If it were up to me, I would stop for the day. Or I give it like 6 hours, 12 hours to come back before I will not trade that 850. Because whatever makes me go beyond martingale level two, and it didn't just happen to me one time, you know, signal or the market is choppy. That's what it means. That is what it does. That is what it basically means. That is what it basically means. So when you have reached your complete signal loss or at your account depth, that is when you should know that it is time to what? To stop. Now, coming to profit target. Before you begin your target, before you begin trading at all, set your target, set your profit target for the day. Now, after target, reduce ladder's depth or stop trading. This is the new part where I wanted to explain, which I hope you guys will be able to get it. I think one of the few things that I saw the discussion this morning where some people are saying, we need to focus on account growth. Well, this is another aspect of focusing on account growth because I was about to say it yesterday. This thing has been depressing day before yesterday. So the conversation that's coming this morning is if you had this uh, webinar yesterday, you would have probably understood what to say this morning. So now, when it comes to account growth, I think we don't take advantage of um, the good days a lot. I think that is one of the things I noticed. We don't take advantage of the good days a lot. So how do we take advantage of it? After target, reduce ladder's depth or stop trade. Now, reducing ladder's depth means that you have to set aside after you hit your target for the day, which probably that is what has happened. Profit target day. There's nothing like I won't call this over trading when you have a structure attached to it. Now, we're going to get into that part very soon. So make sure you guys are active. Now, never allow a winning day to become a losing day. A lot of us do that also. Never allow a winning day to eventually become a losing day. When you are supposed to win, don't lose that. Anything that makes you hit your target one day means that day might be very, very clean, very, very smooth. So be ready to milk that day. Now, how do you milk it? You still need to have a structure to it. I'm not saying you can't trade all day. You should trade all day, of course, if you can. But you need to have a structure to the way you do it. Today alone, I did about $20,000 on my account just by trading in the morning between the hours of. I didn't wake up early. I wasn't awake by six. I was awake by that 6:40. Then 6:40 between 6:40 to 9,000 I traded on my both accounts. I didn't trade on my both accounts. I did some certain percentages on them and I stopped. I milked it. I milked the smooth market. Now, never allow a winning day to become a losing day. We'll be talking about that thing. So now let's go to the next. Bad markets, you protect your account. Good markets, you protect profits instead. So we are going there. Now, recovery after a signal loss. This is one thing that a lot of people don't get. Now, like I said, it is the same process. There's never been anything different from all I've always been explaining from before. Anything that makes you drop from an high price or from an high amount or high balance to a lower balance means that you are supposed to what to reduce your risk. That's what it means. Your 10% will reduce, the martingale levels you'll be able to use will reduce, except you are way above the um the ladder itself, the martingale ladder itself. As long as you are way above the martingale ladder, you can now you don't need to downsize. Yes, good. You don't need to downside. Yeah. But when above you're not above the ladder, you drop from 150 downwards, then you can use the ladder. Every movement downwards of you increase, decrease. That's so when you are required loss. Let's say, for example, any session, you use any session signals, it now already used 10% other event. Do not try to win that error. Never try to win it back. It is done. Don't close. Leave it. Be not eating trade that day. I don't think it's right now. Before later. It's not it's nice. It's very good. Thank God. Telegram. So, I want to do something. So we are going to pause right now. So I want to make it known on this record that we want to pause. This is Telegram. Let me also do something. Is anyone finding it difficult to join? Is anyone finding it finding it to join in? Anyone? Anyone finding it difficult to join in? I think everybody has reduced. The attendance has reduced. Before I close this thing and reopen it again. Anyone finding it difficult to join in? Guys, type in, type. If you guys are finding it difficult to join in, anyone? We have questions, but I'm asking: is anyone finding it difficult to join in the live session? It's smooth here, okay? Is it smooth for everyone? That little loading and this thing did needs to be smooth here. Okay, smooth here. Should I go on? Should I go on? All right. Okay. So let's continue. Now, first things first, I said something. A complete signal loss already used 10% of your what daily drawdown event. If you didn't use daily drawdown, if you didn't use it, you know what to still do, right? So a complete signal most likely would have used what your daily drawdown. You have used your 10% drawdown event. So do not try to win it back immediately. Let it go. It has collected it. Just let it go. Leave it. Leave it. Now, the second thing is when you now drop down, remove one martingale level. This has been working with $150 here. This part of it is me talking about $150 here. Now remove what? One level. So in the next session, you reduce one level. You reduce the one. This is back down. For example, full ladder becomes what? Martingale level 2. Not martingale level 3 anymore, martingale level 2. Now, third thing you need to do is to rebuild gradually. If your target was maybe 10% before, you can do 5%. Because the lesser you chase, you don't know the kind of today you got a full signal. There's a likelihood that tomorrow may not be better than today. We've had weeks where we had a run of terrible trading days for like 2 weeks. Then all of a sudden, it's been back. Now it is running too close to a month now. Everybody has been enjoying themselves. Where nobody say, signal is this, signal is that, or market is this, market is that. No, nobody has said that for the past 1 month, but it's close to 1 month, over 2 weeks of trading. Do you understand? So when you have that, it is by your structure that you can recognize a market that is bad. You will never know when the market is bad or when the market is good unless you have a structure, unless you have a way of trading. When you have that, it will quickly recognize, okay, this is the market that is doing this. Because when you are trading anyhow, when you risk here, you risk this, you come here, you are not standing in one position. You will never identify a choppy market. No, you would have not really identify a good market. It will not just be possible. Why is everybody moving around? Okay. So that is it. You rebuild gradually. After you forget about rushing, you rebuild gradually. When you see an opportunity, you would what? You would take it. But then the first thing you need to do is to rebuild gradually. So as to avoid stepping into a day where things would probably not be as good. Now, as good as you expect. Now, let's go to the next one, which is what? Profit protection mode. Profit what protection mode? One thing is important. You will always make money. And one thing is also certain. You will also lose money. So how do you manage these two? You need to also, as you can protect yourself from a loss, you also need to also protect your profit. Now, protecting your profit starts by you having a target. You build your target. Now, when you now hit your target, then you can now enter profit protection mode. Someone did it on this channel that I was so impressed with, but the person didn't get it correctly. But that is why I'm addressing it now. This is why I'm addressing it. Profit protection mode. Now, this profit protection, you can segment it, or you can be innovative around it in a sense that if you are doing daily profit protection, or you are doing weekly profit protection, or you are doing monthly profit protection, it's allowed. You can do it. But it has to be structured. It's like I'm entering advanced level of structure now. All these things I apply all these things. Now, profit protection mode is you build, you target. So let's say, for example, your first target is 10% for the day. Then you hit 10%. Now, out of that 10%, right, you know that, today is so sweet. I'm just eating it back to back. Now, I still want to trade. I still want to thief more from the market. Like, yeah, the let me be a thief, and I just want to take more from the market. I still want to keep going. I want to see where it leads me to. I can probably make 100% today because of the fact that market is so nice. Market is so smooth. Now, what do I do? Since I know I've hit my target and I still want to trade, what do? I segment a total amount from the profit I made today. So let's say I made let's say $10. My goal is I am only going to be putting 2.5 or $3 out of that $10 as my daily drawdown. Let me come again. So that means that when I make a 10% target profit, I hit the target. Mr. Chris is finding it difficult to join. Then that is the work of Telegram. Close. Any other person having issues joining in? Now, first thing is for you to build, it's your target. Now, when you hit your target, what do? You now remove a certain amount of that target as your daily drawdown. So let's say, for example, it's your 10% target. Then you not okay. I'm going to take out $3. That is entry one and martingale level one. So I can use this to satisfy my need for trading more. I would accept to lose a total of $3. After that, I'm not going to fight the market again. So now, for any reason, if I now increase, I get to 11, I'll keep it at my word. Then the total risk I'm now giving out is now $4. I can take it to 12. Then I'm only exposing myself to $5. Taking to 13, $6, 14, $7, until the profit protection is now very massive and I'm still trading. So whatever it is, I know that worst case scenario, I'm not going to lose all the profit I made today. Instead, I'm going to lose only 30% of it. I'm only putting down 30% of it as a total loss. The moment I hit my target, that's if I realize that a good day is here. And what do you mean by good day? A good day is when you win your signals a lot, most of them in your first entry. A good day is when you win your signals, most of them on martingale level one. Now, you can on a good day you can also win your signals on martingale level two, but it doesn't have to be multiple times per session. So now, if you have a session where you are trading only 5 signals and 2 of them are martingale level two, that's not a good market. That's another tip. That's a tip I'm giving you. Now, if you are trading and you are winning, let's say 4 out of 5 on martingale level one, no problem. But when you enter martingale level two and you are winning it on martingale level two twice out of 5 times, that is the sign of no go. Exactly. That is how it works. So protecting your profit is after your target must be hit first. you don't have any, you don't have a choice. Your target must be it first. Now, when you hit your target, then you segment a part of that target as your daily drawdown. Then you now start trading with that small amount. Then you grow. Then you feed your covetousness from there on out. But make sure that your that percentage that you've taken out is the total you are willing to lose from that profit you have made. So build. Next thing is what? Protect, which I just explained now. Segment, reduce the ladder. If, for example, if you were using all the full one for when you now segmented just $3, what do you mean? What do you think you'll be using? Entry one and material level one. Don't force yourself to use the others. Just when you lose that, whoa, you are already hit your target for the day. You can go and sleep. But the moment you start to make more money, what do? You keep pushing it. You just keep pushing it keep pushing it, increasing your protection, increasing your protection, increasing your protection, pushing it forward, like you are trailing. If for those who are trading, who trades, for those who trade regular trading, you understand what trailing means. So you just keep pushing your stock forward as you do it, pushing your stock forward. Now, the next thing you can also do is to lock the profit. Just lock it. Now, that's what you just did. Lock the profit, lock the 70%. Let 30 play around. Let 30 float. Lock 70, let 30 float. So that is what you want. Lock your stretch target. Now, when you stretch your target, before you can stretch your target, you have to lock your profit. Locking the profit, let 30 float. Put the rest. They just push it. Like I said, feed your covetousness and keep trading. When market is good, you will know. The only way you will know is when you have structures like this in place. If you are just someone who trades randomly, forget it. You will not be able to understand this thing. So let's go to the next one. Whoa. We might need to break this thing into two. In the next few minutes, I will stop. So now, the profits give back rule, like I said, I've broken it down already. This is where I will stop for tonight, and you guys can ask questions. I'll do a part 2 this weekend because I'm looking at it and I realize that I have so much more to talk about. Okay, so the profit give back rule. This talks about protect the day's highest profit from emotional re-entries. 70 to 80% of the day's highest profit should be protected once the target is reached. Like I said earlier, the moment you have reached your target, how do you protect profit? How do you protect profit? Is the moment you hit your target. Once you hit your target, take 70 or 80% out. Right? When you take it out, you separate it, you keep it in one area, and the remaining 20% or 30% is what you will play with to keep making more money for a very good day. Now, don't do this on days where you know that market is stuck because you are just wasting your time. You're just going to waste that 30%. Use that 30% on very reasonable days. You can hit targets like, let's say, 50% or 60% of the time. But every other day, you may not hit target or you will make money. But most of the time, or half of the time, you can hit target. Now, when you hit target, you don't necessarily have to stop. You take 30% out of it and chase for whatever you can chase. But the moment you don't hit target, you're not allowed to chase anymore. Just trade what you can trade for that day and leave it. This is you trying to do what protects profit. So now how do you do it? Simple. Now, opening balance. Remember I said the term, I mentioned terms earlier. Now, opening balance says $100. You have made highest profit today is what? $1.10. Your highest profit is $10, right? Now, let's remove, let's say, 7.5 or let's say 70% of $7. is your profit for that day. Is 70% of your profit for that day. And the remaining 30% or the remaining $3 is what you'll be trading with for your next chase of the market when when you see that everything is nice. That $3 is where you use to continue to pick trades. So everything, your daily drawdown will now change. Regular percent to 30% of your profit. That is what you change. That is what you now use to chase the market. That is the idea. And now Kelly is already wanting me again for I don't know, whatever it is. So I'm looking for questions. So we'll start it tonight. And we'll continue the rest from Sunday. So questions, guys. 15 minutes. We have 15 minutes. So from now to 11:45. Let's questions coming. Guys, submit yourselves on this question from the ones we've already done. Questions. Like I said, guys have already started telling me that they have questions. So you can unmute yourself and ask questions. Making 4 times your account reloaded. That's what it is called. That's what it's going to be called. Making 4 times your account reloaded, part 1. And we have part 2 coming up next. It's not going to be long. Part 2 is not going to be long. So questions, guys. I don't think any. Do we have questions or we don't have questions? Let's hear you guys. I'd love to hear you guys. Questions, guys. Questions. No questions. I'm waiting for your questions, guys. Questions?
Hello?
Yes, I can hear you, sir.
Good evening, sir.
I can hear you, sir.
Yeah. So, talking about the daily jogging, if you hit in a competition, in a warrior competition, the ongoing one, once you hit your daily jogging and you see your people, your peers, your colleagues, so posting results here and there, and while you put your hands somewhere looking, waiting for 6 hours or waiting for 24 hours to enlarge
Yes.
before you start trading again, your system will not balance. You will feel like, let me go back to market and let me to compete to remain in the competition. It's the reason why we blow the account. Because sometimes you will need to relax and calm yourself. But your people are posting here and there, and you are there waiting for 24 hours. But before you know it, people will, they will have more points more than you at the end of the day. Although we have not seen the results so far, you have not posted our results so far. But I know that, okay, somewhere you are doing it somewhere, and you are keeping it. But on a good day, to me personally, what actually, affected my account is posting of other people's results when I'm waiting for certain hours to elapse before I start again trading again.
Okay.
So,
okay. I don't know. Okay. So this is I know this is a very good question. Very, very good question. So you are talking about the effect of others posting results while you have to wait for a reset time. The rule remains the rule. As long as you are trading within the structure of the structure that benefits or that is in that is corresponding with your plan. As long as you are trading within your structure, right? You don't have to look at other people. Just trade your own trade. Do yours. Do you understand? As long as you have your own structure. The reason for the consistency challenge is for you to be consistent at trading. For you to get better at the things that you used to do or you are supposed to be doing for yourself. Trade. Do you understand? Now, when you see somebody else eating the lead order and you have not eaten the lead order, do you used to feel bad? Don't you just continue trading? Exactly. It's the same thing that happens. So now, if you are if you really want to now compete for, because then you want more points, you can ask Mr. Dominic how he's doing it. He has a way he has figured it out. You can ask Mr. Nunes how they are doing it.
He no
They
reply
have
me,
their
or
way.
Dominic no reply my DM. Oh.
They have their ways of doing it. And they easily draw down. They respect it. But there's a way they are doing it, which I will not expose. You have to go and ask them. Let them suggest it to you. It is an idea. Even me, I never thought of it like that. Until they brought this style. So if you want to win the competition, you can also win the competition while following these same consistency rules, while following your own trading style, while following your trading structure. Win the competition, not so hard. But you should also keep to it. There's a reason why it is consistency challenge. It is to make sure that you are at the end of that 30 days, not just trading alone. You should also at least make profit. Like I said, at the end of the month, if I see that you make profit, I'm going to give you 5 extra points. So if you were tied with somebody before, that 5 extra points might be something that would make you win the competition. So profit is also expected. Your points count for every single thing you do. But at the end of the month, if I see that, oh, your starting balance is this and your closing balance, wow, profit, extra 5 extra points. And I will announce it when I'm going to give it to 5 for you, 5 extra points. So, how do you navigate that? Now you need to think. Now you need to structure. Now, and if you don't, you can ask questions. I'm not going to expose someone else's strategy. No, I won't do that. But also ask questions. Okay, how do you guys do it? They would explain to you. Obviously, nobody has anything in markets in the warriors. But that's why I used to call you guys warriors for a reason. You always figure it out. One way or the other, you figure out how to compete and where you are coming from because it is just the idea they use. So, but make sure that you stick to your own rules. You have to stick to it because that's the way it is. So you can't trade, like I said, on MGM Market Warriors or MGM anywhere, as long as it's MGM, you should not blow your account. It is not, no, it is not a thing. It's not something I'm happy about. It's not something I enjoy seeing. Something I don't do. Something that doesn't happen to me. No. Do you get it, Mr. Gator? That is it. So you need to figure out how to compete and at the same time how to um how to still trade the consistency, how to still compete, how to still trade the account and how to still compete. You have to find a way to do it together. You are here, so you have to figure it out. I'm not going to expose someone else's strategy. I didn't I didn't have that idea until I saw them applying it. And there was nothing in my rules that does not permit it. So, and I looked at it, it was not unfair in any way. It was actually a smart one. So, fine, think of something. If you need my help to help you beg them, no problem, I can beg. Mr. Dominic, please, Mr. Nunes, please expose this idea. Let's boys compete. But for me, I look at it, you have to follow your rules. Just because some people are trading doesn't mean you should. There's a day they will also eat daily dollar where they will not be able to trade and you will be able to trade. Everybody, you can't have the same results. It's not possible. It's not possible. I will give everybody the same system. Come back, take the same plate. Not all of us will have the same method. You can see sometimes when I will take a signal and I will not win the signal. You guys will. Sometimes I will sneak in the last second. You guys won't. So we will use this. We are taking the same thing and we are most likely taking it maybe milliseconds different. But we would have different results. So that is how trading is. So when you see others, don't feel somehow about it. Just continue what you're doing. That is what is important. That is what is important. I saw someone who also gave up early on your persistence. I'm like, how will you give up? Anyways, I hope I've answered your question, Mr. Gabriel. Don't think too much into all these things. I hope I've answered your question.
Yes, you are.
Yes. So make sure you ask them, how did they do it? Or you would always get your answer.
Okay, no problem. I will talk to him.
Yeah,
Maybe
you will always
maybe by next month you will also
Yeah.
allow us to introduce our own skill, because everybody have gone out to learn one or two skill. You said it. We should copy the MJM 100% rules. So in terms
Yeah.
of Matigay, I'm not 100% supporting the Matigay before, but due to the rules that guide this community, I have to obey the rules. So
Okay.
so by next
Oh,
competitions, I will apply my own rules, which is out of Matigay, if you can allow me.
okay. I'm going to think about that, and I'm going to find a way to
Because I'm actually working on
work.
something and it's working somewhere. So and I believe that if we
No,
introduce to the community, it will also help other people as well.
no problem. I would no problem. We can discuss that. That is not a problem. We can discuss that.
Okay,
Yes. So
Hello,
question.
guys. Good evening, everyone.
Go ahead, Mr. Dominic. Go ahead, Mr. Dominic. Go ahead, Mr. Dominic. Okay. Go ahead.
Alright, so,
Yes.
first, Mr. Emmanuel, I'm very sorry for not replying to your DM. I've been very, very busy lately.
Yeah,
So,
yeah,
Mr. Nunes is my boss. He doesn't want to talk.
It
Don't
doesn't
worry.
want to talk. I'm not sure. I'm not sure. It's here. It's
I'm
here.
I'm
Okay.
I'm I'm, I'm with you, sir.
Nunes,
Okay.
we will share this money together. See,
All right. What I want to say is that as long as we are market warriors, we share what we know with others.
Yeah.
I'll have a small meeting with Mr. Nunes, and one of these days we will, explain our own analysis, how we are doing it in the group for everybody to adopt. So that's what I want to say. He said, Emmanuel, very sorry for not replying to your DMs. Sorry, sir.
Okay. No problem. So, Mr. Emmanuel, you read it. Did you accept the apology?
No, as he busy, me say if I busy now, everybody busy. Oh, well, not there.
Okay. Okay. Mr. Emmanuel, that's his own way of saying the apology accepted. So, any other question, guys? Any other question before we move? Any other question? Anyone who has a question in regards to everything I've talked today? I think it is clear. I made it very, very simple in most. I tried my best. So if it is not clear, I want you guys to ask a question in regards to that so we can move on. Any other question, guys? Any other question? Our new guys ask questions. Mr. Folari has gone. Mr. Folari has slept off. Probably slept on his phone. Any other question? Mr. Rotimi, any other question? Mr. Godwin, Mr. Inda is still here. Wow, I didn't know until I scrolled down. This is nice. Do you have questions? Questions at all? questions, guys. Questions. I've broken the webinar into two because if I continue, we will still be here by 12:30. So, questions, guys. I love to hear questions. I love to hear
Yes, sir.
questions.
Please drop the link to this for this video to the Market Warrior for those that are
Okay.
unable to join. Although I'm also distracted, I did not really follow like that, so I would love
Follow
to
that.
go back.
Okay. I'll do that. Any other question, guys? Any other question while we're still here? Any other question? Any other question? All right. So in the absence of questions, guys, I would be closing out this live session. So make sure you guys send me a message if you guys forgot to ask questions, or you never got the chance to ask questions, or you were in a space where you could not ask questions. Send me the question in regards to it. After I'm done with the full webinar, I would send the remaining half to I will send the full document to everybody on the Market Warrior, so you can always have access to it and use it. Like I said, anything I have is for you for free. I'm not giving out anything. I'm not selling anything on this channel. It is for us. Anything I do or anything I create is for us. Whenever I create something new, I'm used to not announcing it first because I don't even know how to announce it. I'm used to not announcing it first. You'll see that it is my colleague that will come and say, "Oh, we've created something. You guys come and see how it works." When I do it, I will first of all sit down. I'm always testing. I'm always testing. So just do we have done this. Come and see this. So as long as it is on this community, forget it. It is going to be free always. It's going to be free always. So if anything wants to change, you guys will know best. So it is going to be free always. So thank you guys for joining in this live session. This is almost 2 hours, and I didn't know it to stay up to this or stay this long, but I'm glad you guys stayed up late for me to come and be yarning rubbish. But it is nice having you guys to stay around to this when we did. And for anyone who has a question for me, make sure you guys send me a message. Ask the question on the channel, ask the question on the group. Let us know your questions and I would answer you the best way I can. So the video, I'll be posting it by, let's say, before 9 a.m. tomorrow, and I'll send it into the channel. So Market Warriors webinar on, let's call it 4 times reloaded, part 1. So then we'll continue from the profit give back on the part 2 this Sunday. So make sure you guys are active, stay active, and if you've learned something, you can type it on the group on what you learned also. So if I see, and if maybe from there I can probably see if someone has gotten something wrong, that's the person did maybe the person didn't say something right. Let's know. Whatever you learned, you can type it. You can just drop it on the channel, drop it on Market Warriors. Let's see it. So I'll be able to know if you guys got it right or you guys didn't get it right. Send me a personal message. My DM is always open. I can take maybe 1 or 2 hours or 3 hours, even sometimes a day. Maybe your message has gone down. I will go and find it and I will make sure that I reply that message always. So in the meantime, thank you guys for tuning in. Thanks for staying up late. We'll be seeing you guys later, and that will be by 10 a.m. tomorrow on the MDMAI community for our live trading session. So, good night, guys.